Hello traders, this is Rich from Tradesight. This is the market preview for the coming session. This is going to be for Wednesday, September 25th, 2013. We have a we had a mixed market today where we had some flattish price action out of the Nasdaq side, but some weakness in the broad market. With all things considered, here we're gonna grade the price action today as a B minus. It definitely was. I think you have to assign it some kind of a good rating, because even after we had a pretty bearish day the previous session, we really didn't give too much ground today. Internally, also I'm going to give the market a B minus. Internally, we had positive advanced declines on the New York Stock Exchange, even though the S&P was down by a fraction and the Dow was down as well. Nasdaq was plus 275 issues, but the market was up, so that's kind of just kind of a push there. But I think with having positive advanced declines while the market was lower on the day is definitely a small positive for the market. Trend closed at 1.32, which is going to move the needle a little bit on our 10-day trend, and the VIX closed lower on the day by 23 cents. Let's move on and take a look at the major futures first. All right, for a little change up today, let's start with the NQ futures. The NQ is the stronger of the two sides today for sure. Note that we're still hanging above the 10 EMA, so the trend is still short-term positive, even though we have a couple of dark body candles here. Today we had an inside day where we traded inside of the previous day's range. So Tuesday's candle was completely inside of Monday's candle. The one thing that would have made today a little bit better was if we could have closed above the day's open, which we did not. So that definitely is going to put this 10 EMA in jeopardy if we break to the downside. As always, since we have an inside day here tomorrow, if we resolve this little range, we're going to have a little extra punch probably from the move. So that's definitely something to keep in mind. Near-term levels are going to be the 10 EMA, which is roughly coincident with Monday's low at about 31.98, and to the upside, right now the high water mark of the move at 32.40, 32.41 is going to be the level to the upside. On the broad market, not an inside day. We did expand the range to the downside, but we closed right at the 10 EMA. Unfortunately, it was below the open again, so there's a slight sign of weakness. But for now, we're still hanging on to short-term positive. If we do settle below and follow through below the 10 EMA, that's going to change that. The other thing to keep in mind, though, is we do have the active seeker exhaustion in place. This risk line has been penetrated but not broken yet. So that influence is still going to be weighing on the market. The MACD starting to get into an area where we could cross to the downside, something to be aware of. Key levels, obviously today's low is the 6-ace level at 1687.5, and below that the 50 DMA is going to be your next big level. That's where the low is from this little island up here. We have this island down here, and then we've got this gap up. So this area right here at 1675, 1676 is going to be critical support to the downside. To the upside, Monday's high is going to be important to 1700, 1701, and then the 7-ace level, which is the high water mark of the move so far, is going to come into play if we continue to climb. All right, looking at the Dow Industrials, we did settle here below the 10 EMA, so if we fall through to the downside, we're going to be short-term negative. Key support here at 15,312, which is the 50 DMA, and also the 6-ace level on the Murray Math box. The bonds today were definitely higher on the day. We're starting to push through a little bit higher here. We shrugged off this little 9-bar move to the upside here. Note that it doesn't cover a lot of range, so now we're actually turning short-term positive and intermediate term positive by closing above this 50 DMA. Next level overhead is going to be about 109.5, where the 3-ace level comes into play. There's also the high water mark where this gap fill was rejected here back in July. All right, here's a look at a chart that we haven't examined in a while. This is the S&P, which represents the broad market. That's the red line. Versus the BKX, the broad-based banking index. You can see that the S&P did push out to a new high while the BKX is actually at the same time recording a new low. We're starting to see some more relative weakness to the downside in the BKX, so that's okay. It's okay only if the transports in the oil services, the energy names really start to pick up the slack. This is evidence of usually kind of later in a cycle of a trade, and if we can get some leadership elsewhere, this is okay. But we need to see that late cycle leadership. We need to see the transports and the energy specifically start to kick in gear here to pick up this slack, because this is definitely a negative divergence. All right, now here's a look at the oil services versus the oil futures. What you really want to see is you want to see the OSX lead the oil futures. When the OSX is relatively positive, the oil futures will usually respond in a like manner. So you can see how the oil services were trading fairly well here and trying to push higher, but the oil futures themselves here, which are blue in the blue chart, were kind of lagging, but then they did finally catch up. Right now we did see a new high in the OSX, the oil services, but we're seeing the oil futures start to kind of retreat here. What we want to look for is the oil futures to pull back up here if this positive performance in the OSX continues. All right, now what I've done here is I've swapped things around here. What I've done is I've changed the blue line from the crude futures to the S&P 500, so the oil services is still the red line. What you want to see here is you want to see the oil services really start to kick in here and start to outperform and kind of lead the S&P. Not really seeing any evidence of that yet, though we don't really have a clear divergence yet, but we really want to see that kick in to provide some good leadership for the overall market. So what we really want to see here is the oil services to kick in and pick up the slack from the lagging financials, the BKX, if you will. Here's a look at the cumulative advanced decline line. The cumulative AD line is still not broken out yet on the S&P side, so that's a negative divergence until we get that. It's still close enough to do it, but we definitely want to see that start to get into gear. Otherwise, that's going to be a classic topping divergence where the broad market pushes out to a new high, but internally the market isn't as healthy as it should be. All right, so here's a look at the individual sectors ranked from best to worst. The housing sector was top gun. We had some news this morning that pushed things up there, so they had a very, very positive performance. The airlines were strong. The semiconductors were also strong on some M&A news, so that's always a good sign for the market if the semiconductors can keep that up. But since it is M&A news, we want to see if that can actually last, and that's not just kind of a one-off thing. The consumers were pretty weak. The pharmaceuticals were weak, and gold and silver remains really weak. So all in all, today it was just kind of an okay day. You can see that the transports were kind of buried down a little bit low. They weren't lower on the day, but we didn't really see any kind of a decent rotation in there. The XOI did slightly outperform the S&P. So this is just kind of an okay day. Nothing really sticking out either way, and we'll have to see if they resolve that little mini range, that inside day on NASDAQ, and then hopefully can give us something to work with in the overall market tomorrow. Here I think we need to take a look at the BKX. BKX, they had a very negative day. You can see that we're down to the static trend line here already, and we're only 2 days down so far into the seeker count. So this could be a velocity breakdown to the downside here, where we've got plenty of room to run before we get to 9 bars down to potentially find some support. Tomorrow we may wind up gaming this because we're also at the 4-ace level at 62.50. But if we take out that static trend line and this low here at about $62, we're definitely going to see some negative price action and probably see the market get hit overall. So this is definitely one to watch tomorrow for sure. And I think this will probably set the tone near term. So that's what's on my radar. As always, thanks for listening. This has been Rich from Tradesight.